Hello and welcome to another update video about the TLT. The iShares 20+ year Treasury bond ETF has been completely overextended to the downside. I mean, we've been talking about that. I've been covering it for the last couple of weeks or so because it's time to cover the bond market a little bit here and there, and I will introduce other ones as well because it is a highly interesting market, because I think there is a good chance for at least a temporary bounce that could be quite substantial. The current standard resistance area for a bounce, for a correction, that's not yet target, but it's at the moment the best we have, would be between $122 to $153. It's not guaranteed to get there, but we can define the target much more precisely once we have the subdivisions of this corrective rally to a degree in place. But it's sort of at the moment a landmark target that we have that we can use. So looking at this overall structure, we can see that obviously we've had a long-term uptrend into 2020, and then it topped and it crashed down. It was completely overextended here to the downside. I'm looking at the 4-day chart just now. It's even oversold on the 4-day chart on the RSI. And it shows a bullish divergence. I think I mentioned that in the last video. We also can see, I think, a bullish divergence on the weekly chart, yes. So it's basically, it's not been at an all-time low, also not on the RSI, but that's good because that gives it a chance to produce a bullish divergence. Now, let's look at the daily chart, because here it's been coming down after a corrective rally into the 2020 highs. It's been coming down in a 5-wave move, what I consider a 5-wave move. And we have entered, sorry, I'll go back to the 4-day chart. We have entered, or 3-day chart, we have entered a key support range. Remember what we talked about in the last videos. This is going to be significant support. I would be surprised if we don't see a bounce here. At least a bounce. If that's already a larger corrective bounce, that's what we will have to see. But at the moment, we expected some kind of a reaction from here because of the oversold condition on various time frames, being completely overextended and entering obviously long-term support. So it would be very surprising not to see any bounce there, okay? So now let's go to the daily chart, because we have talked in previous videos about the 5-wave move down. 5 waves down means it could either be a wave 1, which would be a very bearish interpretation, or just an A wave. 1 second. Or an A wave of, there you go, here's the A wave of a larger ABC structure, okay? Now that we have reached this area and we have had 5 waves down, and I even told you that on the smaller time frame we have 5 waves down, we expected a bit of a bounce. Okay, if that is going to be something more meaningful, that's what time will tell. And we've been, here before in a similar situation, even though here we didn't really have that substantial bullish divergence that I just indicated to you on the weekly and the 4-day time frame. And also we didn't have very clear 5 waves down, but now we have. So I'm very much watching for a potential reversal from here. Obviously it's too early to tell, but it's highly interesting. Now this looks promising, okay, on the 4-hour chart as well. Bullish engulfing candles on the 1-hour, bullish, short term. And yeah, it looks good. I mean, we've not taken out, however, the last significant swing high. So this is obviously what we now need to see in the next few days and so on. But there is a lot of room that we need to cross to really indicate that a low is in place. Because I indicated to you in the last video, we need to break above this resistance level here. The 50% retracement level at the very least. And there's quite a bit of distance. So that's at $89.50. That's the absolute minimum expectation, and not minimum expectation, but it's the minimum I need to see to have a first indication that a lasting low is in place. Okay, lasting low is also worth explaining a bit more, because what I would first be watching for is a rally in a correction. Now that could be either a B wave rally or a wave 2, but they are mirror counts. You can't really recognize the difference as we go higher. But down there, when we then sell off afterwards, at some point they will depart. But I'm not assuming yet that we go back into a long-term uptrend, but what I will assume is that we get a bit of a corrective rally. Now, if that is the start here, will only be determined by the $89.50 level and the price structure. Okay, so I can keep focusing on that. I just want to make you aware we've had a reaction where we needed to see one. There's nothing stopping the price to fall a little bit further into support before trying to break higher. But I'm very much watching right now here for reversals, and it's starting to look promising, but it's literally the first day after I've made my last video, and I told you that we now have 5 waves down in wave 5 and be ready for potentially a bounce, that we're actually seeing something. So it's a little bit too early to really be very bullish here, but it's something to observe with interest, to watch with interest, and it's definitely interesting. Okay, but it is that, I mean, I have to warn you not to get bullish here or something. I know a lot of people are very bearish actually on the TLT. But whenever everybody's bearish, I mean, be ready. Just corrective bounces can always happen, okay? But because of the magnitude and the size of the wave degree, it could be quite a substantial bounce. So yeah, that's my update about the TLT. Not much more to add. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 and updates about stocks, then check out our S&P 500 and stock service. You can find a link in the video description. Thanks a lot for watching. Bye-bye.